Good morning and welcome to the launch of the ASEAN+3 Regional Economic Outlook 2021, or REO for short. The REO is the annual flagship report that's published by ASEAN+3 Macroeconomic Research Office, or AMRO. My name is Glenn Van Zutphen. I will moderate today's session. And since 2017, the REO has provided a comprehensive assessment of economic issues facing the ASEAN+3 region. By that, I mean the 10 members of the Association of Southeast Asian Nations, as well as China, Hong Kong, Japan, and Korea. The REO 2021 discusses the most pressing issues pertaining to the region's growth outlook in today's landscape. This report also contains a thematic chapter about global value chains in the post-pandemic new normal. On April the 7th, we will host a webinar where industry experts will discuss the transformation of global value chains, technology rivalry, and the impact on regional economies. Today, we will focus on the Regional Economic Outlook, which includes risks and policy considerations. Our AMRO economists will consider the headwinds to growth, the pandemic's impact, and the ongoing global trade and tech tensions. We'll also look at what's next on the economic agenda of policymakers. Later in today's session, we'll put your questions to our economists. To begin, let's hear opening remarks from AMRO Director Toshinori Doi.
Ladies and gentlemen, members of the media, a warm welcome to the launch of AMRO's flagship report, the ASEAN+3 Regional Economic Outlook, or REO 2021. This year is a special year for AMRO, as we celebrate our 10th anniversary. During these turbulent times, and as a trusted policy advisor, AMRO is more committed than ever to contributing to the economic and financial stability of the ASEAN+3 region. A lot has happened since we published last year's REO report. Back then, the COVID-19 outbreak had just taken the world by storm. Countries all over the world had to devise the best pandemic strategy catered to their own needs. Over the past year, the ASEAN+3 economies have implemented strict and decisive containment measures to protect lives and rolled out swift and extraordinary policy measures to support the economy. At the dawn of a new normal, we are starting to see signs of a strong economic recovery across the region. But the plot is unfolding, and anything could happen, given the highly uncertain environment and the many risks. The REO 2021 report examines the regional outlook marked by an evolving trade and technology landscape. In a few moments, you will hear it directly from AMRO economists. I hope that by drawing insights from the REO report, decision and policymakers will be more informed as economies transit from protecting lives and livelihoods to safeguarding inclusive and sustainable recovery. Thank you for joining us today.
Mr. Doi, thank you very much. Last week, we did a survey on our LinkedIn and Twitter channels to determine the biggest risks to the region's growth in 2021. Let's take a look at the results. A little over a third of you believe that it would be potential COVID-19 waves coming again. 22% thought trade and tech tensions would be important, 17% financial crisis in the making, and just 9% talked about climate change. For more insights into your survey answers, let's ask the AMRO economists for their views. As you listen over the next few minutes, feel free to start typing in your questions on slido.com with the event code #REO 2021 launch. No need to wait until the end of today's session to do so. Unfortunately, AMRO Chief Economist Hoey Kor could not join us today. Let me introduce Lillian Ong, the AMRO Head and Lead Specialist, Financial and Regional Surveillance at AMRO. Welcome.
Thank you, Glenn. Good morning. Well, The COVID-19 virus has virtually ruled our lives this past year. By now, the virus has infected more than 127 million people worldwide. We have under 3% of global infections among the ASEAN+3, with 30% of the world's population, a result of relatively successful containment measures. But as you can see on the left, some of the regional economies have been experiencing new waves of infections recently. Vaccination campaigns have begun in the region, but achieving herd immunity will take some time, and it will be crucial for a sustained recovery. Our global risk map shows that regional growth will continue to be vulnerable to downside risks that are predominantly linked to the pandemic. Specifically, rising financial distress among business and households could potentially lead to a financial crisis, although we currently see that as a tail risk. The US-China trade and tech tensions, which have been overshadowed by the pandemic, represent other important risks. In the medium term, debt sustainability could become an issue if the unprecedented fiscal support is prolonged. The ASEAN+3 region contracted marginally by 0.2% last year. Our baseline forecast is that growth will rebound strongly in 2021 to 6.7% before moderating to 4.9% in 2022. Aside from the low base effect, the turnaround in manufacturing and exports, alongside supportive macro-financial policies, is expected to drive this expansion. Over time, progress in vaccinations and experience with targeted containment should help normalize economic activity, enable the gradual return of travel and tourism, and improve labor market conditions. So, how do we look at this? Well, in our estimation, risks to baseline growth are tilted to the downside this year and are finely balanced in 2022. Ultimately, the region's recovery will depend on the pace and take-up of vaccinations, the strength of external demand, and the extent of economic scarring. We expect growth rates to return to potential within 2 years for most regional economies. However, as you can see on the right-hand side there, previous experience with major crises suggests that the pandemic will likely shift output trajectories permanently lower for many. The pandemic was a massive shock to regional trade. On the left, you can see that goods exports declined sharply in the first half of 2020, even when compared to the US-China trade tensions period of 2019. The recovery since the second half of 2020, although broad-based, remains fragile for many economies. Service exports, on the right, remain very weak, with the shutdown of the travel and tourism industry and other close contact services. Fortunately, services that could be digitalized have been largely sustained. I think it's safe to say that the pandemic has fundamentally changed the future of trade in goods and services by exposing the vulnerability of global value chains. On the plus side, it has also accelerated digitalization. Although online sales have thrived, domestic demand across the region was severely hit during the lockdowns. And you can see from the heat map that retail sales are only starting to turn around. Unemployment rates spiked last year, but the impact has been uneven across economies, sectors, and segments of the population. A large share of regional employment takes place among the more vulnerable micro, small, and medium enterprises, and in the informal sector, and they have been hit really hard. Unfortunately, the economic divergence is likely to continue. Some segments will be driven by the rebound in manufacturing, innovation in technology, as well as pent-up savings. Others will remain under pressure and must adapt, move on, or reinvent themselves to survive. Financial markets have been buoyed by extraordinary policy support and positive vaccine developments. +3 equity markets have surpassed January 2020 levels, while ASEAN 5 markets have almost recovered all of their losses. Similarly, as you can see on the right, Bond yields in China and Korea have returned to pre-crisis levels on the strength of their recovery, while yields elsewhere have bottomed and are gradually picking up. The recent rise in US yields has led to an uptick in regional borrowing costs, some weakness in currencies, and some capital outflows. Now, it's clear that the pandemic has substantially weakened the balance sheets of households and businesses. At the same time, banks' non-performing loan ratios rose during 2020 in most economies, despite regulatory forbearance. The banking system is well buffered for now. Bank capital has been significantly strengthened, and since the Asian financial crisis, has been reinforced with high-quality capital. You can see that on the left, where they have significant Tier 1 capital, so very high-quality capital levels. Our reverse stress tests show that aggregate non-performing loan ratios would have to rise significantly from current levels, perhaps even exceed Asian financial crisis levels, in order to breach minimum capital requirements. Now, let's turn to government debt. We know that the size and scale of fiscal policies that were deployed to fight the pandemic have been unprecedented. Governments have rolled out a wide range of relief measures for households. Businesses have also received significant support. The result is that most economies saw large jumps in fiscal deficits and sharp increases in their debt to GDP ratios. Fortunately, many ASEAN+3 economies entered the pandemic with ample policy buffers and strong institutions, following years of reform and prudent policy making. While large stimulus support has narrowed the policy space for some economies, most still have sufficient buffers to support further stimuli if necessary. Macro-financial policy making in 2021 will have to gradually shift from protecting lives and livelihoods to safeguarding an inclusive and sustainable recovery. Policymakers in the region should continue to err on the side of being supportive this year. They should maintain an expansionary fiscal stance where policy space allows. Monetary policy should stay accommodative, especially with inflation posing little concern for most economies. Last but not least, conventional macroprudential policies should remain tight in countries with strong asset markets, and regulatory forbearance should be calibrated and temporary. With the economic turnaround reinforced by the rollout of vaccinations in some places, policymakers have begun to plan for a transition from existing pandemic policies. But managing the exit will be most critical and must be coordinated, gradual, and well communicated to avoid cliff effects. Our assessment of exit vulnerability suggests that the majority of economies in the region should remain cautious. The timing and strategy of any exit should realistically depend on economy-specific factors. Let me stop here and hand it back to Glenn.
Thank you for your presentation, Lillian. The report and press release are available for downloading on AMRO's website. Please follow this link and QR code to get your copies. And also, please start submitting your questions via Slido. You can see the QR code here and the website you need to go to, slido.com, and you will have a chance to put in some of your questions for our panelists coming up in just a few minutes. Welcome now our panelists, Martti Hinohalas and Arne Öking, both AMRO economists and REO lead authors who will be joining Lillian for the Q&A segment. Marty is here with us, of course, in the studio, while Arne is on work from home country during the pandemic. She joins us from Germany. We have received many questions already ahead of today's event, and we'll answer some of them along with those that you are sending in on Slido right now. Well, while we are waiting for your questions to come in, let me start with one of them. And Lillian, you are first up on our questions today. Question, what dynamics do you think will have the biggest impact on markets in 2021?
Well, Glenn, I mean, where to start? We see many moving parts this year. Of course, first and foremost will be the pandemic and the vaccinations that will take place and how quickly they are rolled out. Then we have the expectations surrounding policy. So two things. One is the exit from pandemic policies, which I mentioned earlier in the presentation, how that is managed. And markets, and that's why communication will be very important. And of course, what happens at the Fed, US Fed, and fiscal spending by the US authorities, I think that would be the ring that will rule them all. And of course, related to that, expectations around US inflation, EM interest rates, emerging market interest rate differentials with the US, that could pose a risk to capital flows, currency depreciation. And finally, the risk that markets might think that they have run ahead of themselves and start converging with the real economy.
A lot to think about, to be sure. Thank you very much. Annie, let's go now to you in Germany. This is from Vietnam Television. Many countries have been trying to push vaccinations in the hope of being able to reopen their borders and their economies. How do you assess the recovery in ASEAN's aviation and tourism sectors this year?
Thank you, Glenn, and good morning. So yes, aviation and tourism sectors, of course, have been devastated by this pandemic. And what we have seen is that, even in places where the virus has been contained quite well, borders have remained closed. And I guess that's mostly because the virus just has been so very persistent again and again. And so while, in some of those economies, domestic tourism can make up at least some of those losses, we don't really expect a full recovery in those sectors until herd immunity has been achieved via vaccinations, most likely. And that will take some time, right? So for some places in the region, that might happen sometime later this year. But for the majority, probably only next year or maybe even in 2023.
A lot to think about there, Anne. And what sectors do you think will be the laggards during the recovery of 2021?
Well, I mean, we just talked about the aviation and tourism sector, but maybe more broadly, close contact services, right? So the hospitality sector, which at least partially includes tourism, some retail trade as well. So all of these sectors we don't really expect to recover until, the virus hasn't been fully stamped out.
Thank you, Ani. Let's go now to Marty here in the studio in Singapore. Marty, what shifts are you expecting to see in supply chain dynamics in this post-COVID world? It is a topic that is on everybody's mind.
Well, true. Well, since, the pandemic highlighted the risks of having widely dispersed supply chains, we think that GVCs will be focusing more on resilience and not just efficiency, which, was the prime characteristic of GVCs until we were hit by back-to-back shocks. Next, in terms of a geographical shift, we think ASEAN+3 will still be a prime destination of GVCs. It has a lot of advantage over alternative locations in terms of infrastructure and labor. So, it is a good candidate for those seeking to diversify for resilience. And well, I guess more obviously, GVCs will be, technology powered as users become more comfortable with tech adoption of which was accelerated by the pandemic.
Thank you, Marty. That question for you is from the Asia Times Financial, so thank you for that. Lillian, let's go back to you now again. Coming in from the Bank of Thailand, a question about China's economic role in the region. Do you see it increasing or diminishing over time? as other economies continue to develop?
Well, Glenn, I think I would look at it in two parts. One is that China is and will be the center of regional GVCs. It is a keynote in the ASEAN+3 network. It's an important source of final demand. And before the pandemic, it was a key source of tourists for the region. Now, China's FDI, foreign direct investment in the region, has been significant, including through their Belt and Road Initiative. China's relative importance in different areas will change over time as it and other economies in the region continue to develop and their economic structures change. So a very good example is that China used to focus on manufacturing and exporting intermediate goods, but has now become a major importer of intermediates as it moves up the value chain. China has also become one of the global leaders in tech, where it used to produce inputs for tech in other countries. It now imports those inputs to export the final good.
Thank you for that. And Marty, coming from an economist at UOB in Indonesia, what do you think is the future of GVCs when countries start looking for growth and looking inward for growth as for sources in the post-pandemic environment?
Well, we believe that the long-term gains of globalization, like efficiency and the potential for shared progress, it still outweighs just short-term gains from protectionism. So with that said, we think the GVCs are here to stay. And as we increasingly see, digitalization as a key driver of GVCs and growth, this requires a lot of, massive resources that are too big even for a single economy. So we think that for the region to succeed more post-pandemic, they need to work more closely with one another, to promote financial cooperation and connectivity.
Yeah, thanks, Marty. Ane, back to you. Do you think the Philippines will be the worst performing economy in Southeast Asia this year? And that is coming from GMA News in the Philippines.
Thank you. That's a good question, right? The Philippines was hard hit in 2020. It's a domestic demand and services-driven economy, so it was heavily disrupted from the lockdown measures last year. And then what we saw was, with easing of measures, remittances still flowing in, policy support, that the economy had started to rebound. And so for this year, we actually expect that the growth rate will be one of the better ones in the region. But now, having said that, of course, a large part of that is the base effect, right? Because 2020 has been so weak or was so weak. And that does not mean that output losses will be recovered this year.
Indeed, that growth is all relative to what we saw in 2020. Thanks for that, Ane. And a follow-up question to you, Ane, from Bloomberg News. Given the recent flare-up in cases and the struggle to vaccinate the population in the Philippines, what are you seeing as the downside risks for that country?
Well, I guess the question is quite on point. I would say, in the short term, at least, it's really those pandemic-related risks that are so important. We cannot expect the economy to strongly recover until the virus is under control. So what is going to be important now is targeted containment, containment that's decisive, effective, and proactive. And as far as possible, then the speedy rollout of vaccines, with vaccines that are accessible and acceptable.
Thank you, Ane. Lillian, let's go back to you. There has been a lot of talk about regionalization, this question coming from the Bank of Thailand, but also countries have been looking inward as well in recent years. Do you think that we are moving toward a greater phase of regionalization?
I do, Glenn. Absolutely, I do. I think the pandemic has further emphasized the importance of regionalization. We are already seeing closer integration in trade and investment. We have the RCEP and the CPTPP trade deals. We are seeing more investment coming into the region to set up or expand global value chains. The China Plus One strategy post-pandemic We'll see further diversification into the rest of the region. The Belt and Road Initiative could open up new markets and new opportunities in the region. And the deployment of new technologies to support supply chains that we have seen with the rush to digital during the pandemic will require both hard and soft infrastructure to be in place, which means stronger bilateral and multilateral cooperation in the region. So product placement here. Of course, we will discuss more of that in next week's event on Wednesday. But finally, if I could just say, there's a very strong commitment to strengthening the regional financial safety net in the form of the Chiang Mai Initiative multilateralization, which of course is the reason for being for AMRO. So we have to support regionalization.
That was a nice teaser for the April 7th program, by the way, Lillian. Thanks for doing that. We'll talk a little bit more about that toward the end of this program today. Marty, back to you. How do you think that China's reshoring policies and the U.S. policies will affect ASEAN's exports and foreign direct investment, particularly when we think of the electronic and the automotive sectors?
I understand the question, the concern about, the reshoring of US and China. And of course, these two are major partners of the ASEAN. And any wholesale reshoring will definitely have a negative impact on exports and FDI. The good thing is we're not yet seeing a wholesale reshoring. And if it happens in a massive manner, we don't think entire sectors will be reshored. Rather, stages of the supply chain. So, for example, those stages that are labor intensive and cost sensitive, these are the sectors that are most likely to be moved or reshored. But when we compare it to sectors like, for example, chips manufacturing, where it is accompanied by a lot of exchange in knowledge and sensitive information, then these sectors will be less likely to be immediately moved. So we don't see a sudden reversal in trade and investment patterns to the electronics and any industries that are similar to it.
All right. Thank you very much, Marty. Anne, back to you in Germany. This question coming in from the Business Times here in Singapore. With the support provided by the stimulus policies and growing optimism following the vaccine rollouts, what do you believe are the risks to the outlook?
Thank you. Yes. Well, Lillian mentioned the main risks we see during the presentation. And there are quite a few. We see high uncertainty going forward. Let me maybe point out three main risks we see in the short term, or three main issues where risks can arise. So first, of course, is, pandemic-related risks. So, for example, vaccine rollouts will be a major factor for recovery. If they are delayed, or maybe it turns out vaccines are less effective against new mutations, then that could, of course, derail or prolong the recovery. Then the second point is that the extent of economic scarring is not yet clear. Some of that might only be visible once policy support ended. And those economic scars, especially, more permanent economic scars, will be one major challenge ahead. And then finally, I would say, for our region in particular, it's the recovery in external demand and what will happen to global trade.
Thank you very much for that, Ani. Marty, when you look at the impact of the U.S.-China trade tensions on ASEAN, what do you feel are going to be the negative impacts on those trade tensions that we see? And this question is coming from the South China Morning Post.
Sure. Like we've discussed this in detail in REO 2020, and we saw regional exports were really hit by the tariff measures and the negative sentiment surrounding, the escalation of the U.S.-China trade tensions. Fortunately, an opportunity really rose for the ASEAN in the sense that, investors who were trying to shield themselves from the tariffs saw the ASEAN as a promising alternative location. So this, of course, was accompanied by, strong inflows of relocation and co-location projects in the ASEAN, an example of which is Vietnam, of course.
Okay, thank you very much, Marty, for that. And if I can just follow up, the impact of the China-US trade tensions has been going on for years now.
Yes.
How do we think that's going to impact the GVCs, the global value chains?
Sure. So we think, there's really evidence that, imposition of tariffs and things like trade wars do not just affect both sides who are directly involved in it, but all economies who are deeply embedded in GVCs. And of course, we know that, a lot ASEAN+3 economies are part of that group. As Lillian said, it's a downside risk for the short term. It will definitely have a negative impact on, for example, the future of GVC investments. For example, we've seen the relocation from country A to country B. And it's a downside risk for the short term. The good thing is we do note that China is making good progress in meeting its commitments under the Phase 1 deal. So that's an encouraging development in this front.
Thank you, Marty. This next question coming in from Ascorbid now in Indonesia. Lillian, let's give it to you. What would we need to do to accelerate economic growth domestically and regionally, given that the government's run up to the huge debt during the pandemic?
I think, as I mentioned earlier in the presentation, Glenn, fiscal policy space has narrowed as a result of the pandemic. Many countries have had to, increase their fiscal spending significantly. But they still have moderate fiscal space, as you saw in the table that I had earlier, to provide further stimuli if necessary. Now, as the situation improves, governments need to be more targeted in their spending. They need to provide more support to the segments that will drive and sustain growth going forward. I think we spoke about the new economy a little bit. And they need to avoid artificially supporting firms that are no longer economically viable. I know that's easier said than done, during stressful periods. But an alternative is to perhaps provide support to workers while they upskill to meet demand in the other more in-demand sectors.
Yeah, well, thank you for that, Lillian. We have more questions coming in on our pigeonhole. And let's go to you right now, Ani. What do you think is the outlook for insolvencies when some of this support might be withdrawn or when the support runs out? The free money doesn't last forever, as we all know. And while many nations have been very generous with it already, what's going to happen? How many companies or businesses do you think will see problems with insolvencies?
Thank you, Glenn. Well, as I mentioned, I think in my answer to the last question, one issue we're having right now is that we don't really know, right? We don't know the extent of the scarring that the pandemic has given. We have been seeing quite strong government policy support within the region, and that has helped many businesses to survive so far. And of course, our hope is, as Lillian was saying earlier, if policy support is gradual and we can avoid those cliff effects, then governments can support those businesses to avoid insolvencies. But I think we have to be honest and really say that at the current time, we don't know the full extent of the scarring that has happened to businesses and maybe also households.
Yeah, thank you, Ani. Lillian, would you like to weigh in on that question as well about insolvencies and what happens when the free money runs out?
So I think, Glenn, this is, what I was saying earlier, again, in the presentation, that, and Anne is absolutely right. We don't know what the scarring is going to look like, and policy needs to continue to be expansionary where and accommodative where possible. And also then, the exiting from those policies is going to be very, very important. And it has to be well communicated, it has to be gradual, and it has to be very well coordinated. Otherwise, it could amount to pulling the rug out from under the feet of the economy, and we want to avoid that.
All right, let's move on. Another question coming in. Let's go to Marty now. Marty, how close are we to an ASEAN community that is truly integrated and can use technology to drive this aspiration? What does that look like?
Well, I must say that, ASEAN economies have done quite a lot in like achieving closer integration with each other. Of course, we have some areas where more integration and connectivity can be done. So, for example, services, and services is one factor that really was hit during the pandemic, and now is the time that we can, of course, digitize some pillars of services. And of course, in terms of technology, I think the master plan for digital ASEAN is really a step in the right direction. And lastly, ASEAN really must be able to connect and have the private sector basically to cooperate with the governments, and basically have all the players, all stakeholders in an ASEAN community to be involved and engaged in the policy.
Thanks, Marty. Lillian, let's talk about inflation and what's been going on in that realm. Are worries about inflation at this point misplaced?
In the ASEAN+3 region, by and large, yes. If you look at where they are now versus, so let's look at the countries that are inflation targeting. If you look at where they are now, so Korea, Indonesia, the Philippines, Japan, inflation is either well below target or within the band. So I think within the region for now, inflation is not, and I said this earlier as well, it's not a concern. The danger, of course, is what the expectations are in the US. Right, so that, as I said, it's the ring that rules them all. What they do there is going to have the biggest impact, regardless of what happens here in many ways. And then the narrowing of the yield spread could actually see capital outflows from the region, which is what we would be concerned about. So what happens in the US, despite our inflationary situation being quite benign here, it's going to matter.
When we think about that, the inflationary landscape, we think about the various monetary policies across this region. Do we expect to see some sort of commonality in the way that individual central banks are going to be handling their monetary policy going forward? Or is it just going to be case by case depending on the country?
Well, policy making is always going to be case by case, but the central banks are currently accommodative, and our recommendation is that they stay accommodative for as long as possible for the time being. So I think that's a short and sweet answer.
We'll take it from there. Okay, thank you so much. We want to thank Lillian, Marty. Oh, we have one more question, Marty, for you. It's just coming in. Great. Can you discuss how emerging markets will benefit from RCEP, and how does it complement the existing ASEAN FTAs? Great question.
Yes. So, well, at top of my mind, really, get from RCEP and emerging markets is basically market access and more harmonious systems of trade and investment. And what RCEP really does is it includes a lot of good pillars in terms of like intellectual property protection, and that's important for investors to really feel confident about investing in just emerging markets. And it allows emerging markets to at least have access to a wider market and access a lot of the advantages that they would not otherwise get if they were just in a bilateral or a trilateral FTA.
Thank you very much, Marty. We're going to close off our Q&A session there for now, but I want to thank Lillian, Marty, and Anne for their insights. Also, thanks to all of you who tuned in today for this discussion, especially members of the media, for your time and your questions. Please do go to the AMRO website to download the report, the press release, the PowerPoint presentation, and infographic. And please also note that on April the 7th at 10:30 a.m. Singapore time, we will hold a panel discussion on the transformation of global value chains, tech tensions, and their impact on regional economies. And notably, Ms. Andrani Raja, Minister in the Prime Minister's Office, Second Minister for Finance and National Development in Singapore, will give the opening remarks at that session on the 7th of April. You are all invited to join us for what will be a very interesting session. For details and to register for that webinar, please go to the link that you will see here in just a moment, AMRO-Asia.live-webinar.tv, AMRO-Asia.live-webinar.tv. And we will see you all next Wednesday. Thanks so much for being with us today, and thanks to our panelists as well.